This is the Southside School of Financial Freedom Watch List and Market Report for the week ending July 31st, 2021. Our question this week is, what is a hedge fund? The answer will be provided later in the video. This week, the market ended lower. The Dow Jones Industrial Average decreased minus 0.42% on Friday and was down minus 0.36% for the week. The S&P 500 decreased minus 0.54% on Friday and was down minus 0.37% for the week. The Nasdaq decreased minus 0.71% on Friday and was down minus 1.11% for the week. Looking at the week, we can see that there were 7 up finishes versus 8 down finishes for the major indexes. On Monday and Thursday, the 3 major indexes finished up. On Tuesday and Friday, they all finished down. On Wednesday, the Dow Jones Industrial Average and the S&P 500 finished down, but the Nasdaq managed to finish up. The new unemployment claims were 400,000 versus 385,000 expected. U.S. core capital goods rose in June. U.S. GDP rose 6.5% in the last quarter, which was below the expected 8.4%. Mortgage rates dropped to a 6-month low to 3.01%. New home sales fell to an annualized rate of 6.6%, below May's rate, and the Federal Reserve left interest rates unchanged. New unemployment claims, core capital goods changes, GDP increases, mortgage rate decreases, new home sales, and Federal Reserve announcements on interest rates are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is a hedge fund? A hedge fund is a professionally managed fund that is open to qualified investors. Hedge funds invest in a wide variety of financial instruments, including derivatives and other assets like land, gold, oil, and others. They seek to hedge their risks by structuring their portfolios with a variety of assets, some that go up when others go down. Hedge funds charge an expense ratio and performance fee known as 2 and 20. That is, management receives a 2% management asset fee and 20% of gains made. Are you a qualified investor? Do you invest in hedge funds? Do you invest in mutual funds? Do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught in school. So, you are going to have to teach yourself if you ever want to learn how to get wealth and income through the stock market. You must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you how to be a worker. They did not teach you how to be an investor, and they taught you nothing about the financial system. You can learn how to be an investor if you simply start reading books about investing. Books that you can get free from the library. It is not difficult to learn how to be a passive investor, which is how most people should start. check out the list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my trading watch list from the week ending July 31st, 2021. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Grayscale Bitcoin Trust, ticker symbol GBTC. It's in the second column. It increased 27.77% for the week, and it was up 1.71% on Friday. Grayscale is an investment vehicle similar to an ETF that enables investors to gain access and exposure to the price movement of Bitcoin without buying, storing, or safekeeping Bitcoin directly. Looking at a summary of results, you can see that Grayscale has been volatile and it has increased over 8.5% year to date. I own Grayscale shares. I do not generate cash flow from it because Grayscale does not have option contracts. I use options to generate cash flow from stocks. I use Grayscale as an indirect investment in Bitcoin. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio is not outperforming the S&P 500 index ETF SPY. The Southside portfolio is down minus 5.11% versus 17.29% up for SPY, a difference of 22.4%. The Southside is losing to SPY by almost 22.5%. The primary reason the portfolio is losing is that the Southside is heavily invested in Bitcoin. And Bitcoin has taken a big hit in the last couple of months. However, this week Bitcoin made a big comeback. Will it continue? We'll see. The portfolio is 65.63% in a Bitcoin trust. Equities, including puts, calls, and ETFs, make up 21.45% of the portfolio. Cash is 12.92%. The cash flow generated for this week was 1.85% of the portfolio account value. The account value changed by 21.22%. Meanwhile, S&P 500 ETF FUI changed by minus 0.33%. I sold option contracts on 2 positions this week, 2 calls that range from $732.02 to $800.36. I also received the cash dividend of $185. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. If you want to learn how to use the U.S. stock market to become financially free, then visit the Southside Schooloffinancialfreedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog
my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales: How a Small Fish Feeds Makes Money Off Wall Street by Melvin C. Dunia, available on lulu.com and amazon.com. Please like, share, subscribe. ADOS, ADOS.